Coming into 2012, this truly is the opportunity of a lifetime. Anyone who's traded in stocks for more than a brief period knows that hindsight is a wonderful thing and an instructive thing. And we could have all been millionaires if we'd just taken that opportunity that we planned to, or we hadn't been influenced by the media at just the wrong time. Generating profits from trading is really a simple process if we could just become focused on our target and shut out the world around us. But the reason we seem to keep missing these wonderful money-making setups is because they always require us to act decisively just when our natural emotions are screaming to go the other way. The good news, though, is that we can retrain our psychology over time so that we become masters, not servants of our emotions. So that brings me to the current times, where we have an increasing number of people questioning whether the 11-year bull run in gold is finished. This happens all the time. Gold is currently trading at $1,665 an ounce and looking like it may have bottomed. I can make a case either way for gold to have perhaps one last thrust down to a big picture support level around 1,445 prior to commencing what will probably be the most powerful leg of its run upwards. And yes, the best is still in front of us. Or the other way is that it could just steadily move higher from here if in fact it has already bottomed. Either way, I suspect that the action will be volatile and it'll present plenty of great opportunities for profit. So there is no rush. Equally, gold stocks have underperformed the gold price by an almost unprecedented level since the start of 2011, and they will play catch up in a major way. There are some things that will never change in financial markets, and it has nothing to do whatsoever with European or US debt or any of the other reasons that are being put forward at the moment. The fact is, prices will rise or fall to irrational extremes purely because of fear and greed, and they will then revert back to normal just as everyone jumps on the current trend. And this cycle plays out over and over again. Now, at the current time, there is a massive disconnect between the prices of high-quality gold-producing businesses, and that's what they are, high-quality businesses, and the price of gold itself. And this anomaly will correct back to normal, at least, and if history and human emotion is any guide, we'll probably move to the other extreme, and we'll see gold stocks significantly outperform gold. My firm conviction is that selected high-quality Australian gold producers are at least 50% undervalued by any of several metrics. We're on the cusp of a wonderful period of catch-up, so ensure that you know and are clear on how you intend to exploit this opportunity of a lifetime, because it's not just going to fall in your lap. The vast majority of traders need a substantial level of assistance to perform well under the type of pressure that the current day volatility exerts. Now, coming back to the gold price, and just a quick perspective on the trend itself. Gold is the only commodity to have risen in price every year for the last 10 in succession. It's been tracking above the 200-day moving average for the vast majority of those 10 years, and has only had the very briefest of excursions below that moving average. Many analysts who looked too short-term became excited when the price dropped below that 200-day moving average line again in December and declared that the bull run was finished. If only they would take a wider view, they would see that it's happened 6 times in the last decade, only to quickly set a new high each time, and it will be no different this time. The only questions are, how soon and from what low point will gold do that? So that's the high probability charting perspective on gold. Now what about the fundamental picture? With the largest buyers being central banks and the gold ETF or exchange traded funds really accelerating their purchases, and with mine supply continuing to struggle to keep up, the fundamental case built on supply and demand considerations really just gets stronger every month. With the low-hanging fruit, or in other words the easy gold, in politically stable jurisdictions having been found, and the relative scarcity of capital that we have now, I just can't see how supply is going to respond in a meaningful way. If supply struggled to keep pace for the last 7 years with large available profits, then why would that dynamic change now? The obvious answer is that it won't, and gold will head much higher. Now, there is a huge difference between the shortage of gold in the physical market and the fluctuations of the paper futures market for gold, which effectively sets the short-term price. Try buying physical gold these days and you'll find out that it's not freely available. So there is little doubt that the futures market suffers from a degree of price manipulation. There's a lot of vested interest, and so therefore longer-term investors can effectively ignore the week-by-week fluctuations because really it is just noise in the market. Shorter-term traders can benefit by buying gold and gold stocks when they're oversold, knowing that as sure as night follows day, their prices will rebound. Now, there are some techniques that greatly assist with determining when the time is right to buy, because one doesn't want to waste time and resources by going in too early and then having to sit for weeks or months through further declines. However, at the end of the day, you have to be a contrarian to really cash in, and now is that time. Don't listen to the mass thinking on gold. Plug yourself into an information source which can guide you to substantial profits over the next few years. I've been researching gold and gold stocks extensively for the last 5 years. I've isolated the very best gold producers that Australia has to offer and provide that information through the various forums that we run. If you'd like to know more, then go to www.specialistshareeducation.com.au.